go. I'm already ready. You know, guys, if I'm coming in this early, I'm ready. Let's listen to this last little jam. Turn it up. Let's go. Thanks, everybody. How you doing this morning, this afternoon, wherever you are? Audio is low. Audio was low. I was talking. Talk to me now. Let me reduce my feedback here. Give me a check. What's going on, chat? Hey, everybody. Welcome. David, Crypto Cartel, Neon, Vlad, Badger. Let's rock. Let's go. James, how are you? Ethereum killer. Are you ready? Are you the one killing the Ethereum? Let's go, folks. I'm coming around. Yeah, voice is getting back here at a nice spot. What's up, Snipes? Welcome, everybody. You see the headline. Nat gas, 13-year high on U.S. Growing supply jitters. No kidding. No kidding, right? Well, today I want to talk about harmonic pattern persistence because that's how we get to here. That's how we call it in advance at $2.40 to go to $8 or $9, and we go to 15 on natural gas. This is what we do, folks. It takes discipline, it takes specific, precise analysis, and then it takes persistence, patience to be able to realize the headline, the final headline, because we know if the headlines are flashing like this, we're probably pretty close to our profit targets. Let's look at Boyle right off the bat. Nat gas up huge today, as we have been looking for all along. And our beloved Boyle boiling above 100 in a type 2 return off of the crab pattern that we identified. Oh, this is just, you're talking 2 weeks of trading where we're taking profits into the type 1 reaction, back down 78.87 to set up for the return. Now Boyle goes to 127, 127. We actually are hitting the XA level at 105 today, but no worries. We're doing that with a gap up. We want to close above this. And then we're not even going to look at this until we get some kind of confirmation variable. All the way up there, HSI is just breaking out now above your 50 level on the daily. We've got a ways to go, folks. Boyle, 107. Now, 127. Hop level target. Nat gas, NG, folks. Look, it's not going to stop. It's because these idiots want to release 1 million barrels a day. They think that's going to do anything. Sorry, no. Nope. We need to get tough on this market, folks, on all of it. Tell me what that is. That is a beautiful type 2 that is exploding on the retest. There's your crab pattern. We've been back to back on a lot of these beautiful crab patterns, daily, weekly. Nat gas headed to the hop level at 916. 916. And it's doing so in demonstrative fashion in the way that you want to see. That's the thing you have to understand about properly measured harmonic patterns, that when you get your levels right, it's going to be, illustrative. It will be demonstrative at those levels. Now, we're checking back off of that prior HSI signal. Okay, we had an HSI signal on the first test on nat gas, and the first brush at 8. This is check back day, but I don't even worry about that until the close tonight, tomorrow, or even better, until I see one bearish day. I will ride that to the hop. Really critical that we follow the framework. If you're not aware of the framework, folks, again, let's just dial it back because I've received even questions about, and I don't mean to harp. I need to kind of give the 30-second thing for everyone to say go to harmonictrader.com because I'm still getting questions of where do you get the software, where do you get the books, where do you start? You start at harmonictrader.com. Please tell your friends, share with your friends. I really don't care about likes. I don't care about subscribers because I feel like I want people that want to know. Okay, I'm not going to chase down a bunch of people that are, looking for some kind of crypto entertainment. That's not what we do here. This is serious business. I like to try to put the analysis out there on point to the level of a hedge fund manager and try to impart that everyone should be thinking like a hedge fund manager. If you have $1 in the market or $1 billion in the market, if you want to do this, we need to be thinking like hedge fund managers. We need to be anticipating, measuring, precise, analytical. That all starts with your basic membership. Go to basic members. And then again, folks, the 3 things that you need to do first is you need to download the software. And now I'm going to demand that everyone downloads HPC Pro. Either get with your MetaTrader. I work with the eSignal, by far the best data in the world. NinjaTrader or Sierra Charts. And then, of course, you want to start with the TradingView program because it's the #1 web platform in the world. Those guys over at TradingView are super sharp. Happy to even say that I know a couple of the founders who are great guys. I have personally known these guys for several years, and these guys are doing just relentless work to continually improve their site, their platform. Big shout out to TradingView. I'm extremely appreciative of what they do every day for traders. Then get to the books. Download all 3. These are all free. You go through them, take your time. You can purchase them if you want, but they're all free on the PDF. And then you watch the webinars. Oh, number 4, you get with our group, the Discord group. That's how you do it, folks. And then come here Monday, Tuesday, Thursday, 11:30 or 12 or 12:30, whenever it is. It's going to get back to a more precise time. I've been on traveling the last couple of weeks, but listen, I'm going to keep the information flowing on point because things are happening in a major, major way. That was my point yesterday. We cannot get complacent. Complacency is the death of a trader. And this is the worst time to be complacent. This is the worst time to try to be dismissive and say, okay, I'm frustrated with the action. I just don't even want to look anymore. And that's a common response I'm hearing from a lot of people. And that's when you turn it up. Let's get to 1 or 2 of the larger markets as a quick review. Here's the Dow doing a silly reaction type 1 shark. I misspoke yesterday. I was calling this a bat pattern. This is a shark that completed yesterday and reversed. So here's what we've got. And this now gives us everything we want to know about this summer, this malaise that is continuing, accelerating, where you see the evaporation of equity values and you see spiking rates and you see stagflation and you see oil go to all-time new highs, natural gas going to all-time new highs. Anyone see the price of diesel? Diesel, all-time new highs, and that situation is not going to abate anytime soon. I absolutely want everyone to be to kick it up a notch, including myself. I'm fired back up now. I've had the time I needed. So without getting into it, I just need to emphasize even more so where we are. And things like oil and nat gas, you know, unknown, ignored markets that we have been talking about for 18 months, folks, have yielded massive, massive opportunities multiple times. Listen, we were just dealing with oil back at 34. People were freaking out. We did a huge run to 100, back to 34. I said, no worries. We easily go to 100 or 200 or 265 is the target on oil, quite frankly, longer term with the work that I have done. Can't dismiss it. Sure, we can go through a stair-step process of this gets rejected at the hop, then you come back. I don't know if we come all the way back to T2. Maybe we do. Maybe just T1 or just a sideways pause, but clearly next 30 days, actually we're already about 7 days into our next 30-day cycle, will tell us everything we need to know about natural gas, crude oil for the rest of the year, if not the next 18 months, because this is a potential spot to begin the larger acceleration after we resolve type 1, type 2 return, type 2 reversal, if we get one. A lot going on here. Also, really quick, let's look at the XLE as a broader energy component. Something to consider for, of where energy is going to go. On the daily, we had this brief pause off of 80. Here's the last couple of HSIs. There's your check back at around 78. And you go sideways, pause, come right back down, give yourself another HSI. Folks, 73, 72 area should be our continuing support. Not to mention, we failed a massive pattern, this Gartley off the low at 64. And it's been a little questionable in terms of this recent pause, but that's all that is a pause. Do not for a second think that this structural inflation that has taken hold since last January 20th, yep, January 20th, 2021, yeah, started right there, okay? It's going to continue. Where does XLE go? We're going to go back and retest all-time highs, 97, folks. Trading 78 at the moment. And we're just pausing midpoint of a massive acceleration phase. And beyond that, XLE could do even bigger things, but we'll take it in chunks. You have, actually, the monthly chart is probably more telling. And it's interesting, the further we get out, the further this unfolds. It's real interesting how we find ourselves, or at least as I'm doing these sessions, we go through our daily and weekly scenario and then we say, well, these keep breaking out, these keep blowing out these possibilities. You got to kick it up to your monthly targets. The monthly is at stake, and we have clear patterns. Harmonic pattern collection patterns are telling us go back and retest 100, or even retest this kind of looping deep crab up here at 109. Same deal with nat gas going to 15. Same deal with crude oil to break out. Crude oil is just a matter of time before it goes to all-time new highs. There's no way they can stop that. So I think the people that have been here for the duration, the last 6-7 months that we've been doing this, know what I have been saying about this stuff over and over again. The only thing that it takes is time. Time to be realized in this fruition stage of getting to the point, getting to your levels that are the targets, the time it takes to reach targets. That's why on the flip side with the equity markets, look, Dow's up 200, big deal, big deal. After being down 1,100 and change the last couple of days. But Gotta say that this stuff is going to get to be a grind. Seems okay today, always good to have kind of a little relief rally day, but that's all it is. And it's not, oh, it's now only up 61. When we started, not even 15, 20 minutes ago, Dow was up 150 and change. And I think everyone knows, I'm not going to, go over it. Please watch yesterday's session. We're now in simply just assessing every equity market, every equity position, stock, ETF, relative to how it's going to act against the COVID rally. And what I'm essentially saying is the COVID rally was an artificial, oh, 13-month, no, excuse me, 18-month run that is over. And it needs to do a minimum from a harmonic perspective, across the board, 382 runs. For the Dow, that gets you back to under 30,000. And by the time you get back to 30,000, that takes you, in my opinion, the cracking of 30 is going to probably scare a lot of people. I think a 50% correction, 275, 27,500 are a couple numbers to consider with your big, big, big number 886, 20,400, essentially. These are big retracement values that could be realized in a rather precipitous, fast paced decline once we violate and close under the March lows. You get under 32.2. We were almost there yesterday. It's done. And then from a technical continuation perspective, we would look for a minimum 382 or 50%. Treat that in the same way that any minimum reactive move, and it looks like this. If that's a big 1618, let me improve that. Looks like this. If this is a big 1618, which it was, the COVID move on the monthly chart, folks. Look at that. Your 1618 is at 36.6, and you could not continue clearly where type 1 reaction go to your 382. I mean, that's framework by definition. And then do we retest? I don't think so. I think you have to just park it at a C point, and until we get down there, which 382 move is it cracks 30,000. I'm telling you now, it cracks 30,000, which is another 10-15% lower than from current levels, and there's no opportunity in this market, and there will not be any opportunity on the long side, and I'm talking longs, until we can absolutely establish some kind of major retracement on the monthly, big 1618 to the downside off of your dailies or even weeklies. We're in a 30-week malaise move, folks, that has got issues. And here's how I think it's going to unfold going into the summer. That, as I said, this shark pattern could jump up, become a 5-0, some kind of weak rally, and then down hard, and we fail. One or two stocks, and then I have to get the crypto because it's going to affect crypto, and we're seeing it in some key altcoins that disappointing, but the price time thing, it's just ugly. The time that it's taking is a long time, and price will lag. And I'm not that I'm too concerned about it, other than you're gonna be dead money for a long time. Here's Amazon, folks. And I really want to walk through this of the beautiful pattern that we've talked about. We've also talked about the FANG getting defanged. If it's Netflix, going to go to $50. If it's what is it? If it's Meta's going to do the same thing. Meta's going to get cut in half from where we are. I wouldn't even buy that on principle, but quite frankly, total garbage stocks here that are, your true value is about to get realized. They just were lucky to be on an easy monetary cycle for the last 10 years. And now, guess what? No, those days are over. Sorry. And Amazon, which I think you could have a lot of arguments for what's possible has done the 1-2, and then we come back and fail. We fail the hop. Look, this is just remarkable, and this is demonstrative stuff. When you see your measured level gap straight through, that is a sign. That's a sign you cannot ignore at a true harmonic level that says lower, failure, failed. We talked about some of the failed stuff yesterday, some of the signs, some of the things you look for, where, especially after it goes through the framework dance of, a little two step, one, bang, two, bang, and back down with HSI at each point. Up here at target 2 at 3360, Amazon was clinched with HSI up there around 3320. That's meaningful stuff. Meaningful stuff that you're stair stepping lower, not higher, you're stair stepping lower. And then for Amazon, you have to look at the whole boat. You got to look at the whole trend, the whole monthly chart, and say, okay, what's long term uptrend? Because all of these, in your best case scenarios, go back and give you a retest, and Amazon still has to get down to about what, 2250, 2270 to even test long-term trend support. Here's the other measurement you want to do with all of these type of stocks within this correction is tell me where your minimum 382 pullback is. Minimum 382 pullback on Amazon is 2300, 2320. 50% retracement is about 1860. I think that could be absolute consideration. And oh my goodness, what would be a full reset? Full reset, 886, come back, retest the whole cycle, about 300. I'm not going there yet. I just want to make you avail you to what these possibilities could be, because it's not, when you're at this level and you're seeing this stuff get eviscerated. Major stocks like Netflix, Meta, they're just getting eviscerated. There's a larger story behind it. All-time 50% retracement on Amazon is around 1800. I'll book that. Book it. Book it. Don't fall for this. Focus on energy. Focus on, you know, gold got crushed yesterday. There's probably an opportunity there at a lower level, but look, crude oil, energy, natural gas, that's what's running. And we talked about even some of the defensive stocks like Coca-Cola taking it on the chin, that even those are at a point where they need to come back and pull back. Here's Coinbase, folks. Could it be any uglier? Really? Coinbase, I'm sorry. You're that talk about rug pull, and we will be talking about rug pulls when this is over, of how could they, how dare they, or even your, say, Coinbase, new lows on that move, or even like something like ARK, which, boy, is kind of reminds me of Henry Blodgett. Kathy Wood might go down as the next Henry Blodgett, although Blodgett did some really funny things. He was a darling of the .com, and now he's barely a CNBC commentator because these guys kept on chasing this stuff to the top. We're down here on ARC, well below the hop. Tell me what it does. There's the 1618 completion point. This is a perfect crab pattern because you have a 618 at your B, you have a 3.14 at your CD, and even up there that's probably a 618, even though it says 707. It's a perfect crab. What's that mean? It's a proportionally ideal pattern right off the top that hit the level. This is a beautiful example of a failure at hand. Tell me what it does within 30 bars. There's 30. Up, roll over, down, failure, nothing, 0. Nothing there. And again, this is another one of those darling IPOs that just turns out to be garbage. There's your all-time weekly chart. Off the 2000 low, we're already at the 886 with that same weekly crab, but showing on a weekly pattern, going lower, ARC trading 40. You know what? Talk to me at 30. Talk to me on a full retest because there's really not much here confirming what we need to see. And until I had a confirmation there, you might get a bounce. But I absolutely, I just, these kind of, this kind of behavior at massive numbers like that. I mean, there's a full reset on ARC to the 886 at $50, $49. What's it doing? Because terminal bar hit last week. And all you need to do is just keep failing the weekly lows. You go under 46, then this will go for a while and do nothing. A tough market, tough market. Let's talk about some crypto, please. Let's start with total. I think the total crypto market cap, let's get over there. Total crypto, 171 is the big number, folks. Let's clean all this up and let's just take a look at the daily chart. Crypto here. Now 1.708. Here is your XA level on total crypto market cap. This is where the real type 2 process begins because of this formation. That was your true type 1 reaction. So we're in a type 2 return. Can we get a 3-day reversal? Can we get a close above a prior day? What is it doing? Because there's the line. There's where the official type 2 begins on retesting your XA level. Do we have any confirmation variables here that would help us? HSI is doing nada. Amplified is deeply oversold, just languishing in your oversold level. I just, more time. We need much more time on all of this before it can even trigger another sign, another signal. HSI, something. I also highlighted the fact that we have so far this year 1, 2, and 3 HSI signals that we're trying or are trying to establish some kind of stabilization. Now we are here, kind of at your final point, not doing it. I'm going to tell you what my concern is right now. My concern is a hop test at 1.37, 1.369 on the total. If we see this fail here and we start finding ourselves at 1.67, 1.64 trillion, that's really not the kind of action you want to see on the total value of crypto at this point. If this is going to hold its head and you're going to continue a long-term uptrend accumulation of what started a few years ago, well, you cannot, you're running out of time. There's your long-term uptrend. And it's 171. 171 is the exact number. I'm going to, I thought this was a nice construction, beginning of a consolidation at the 30, at this 1.5, 1.6. He got to 2.09 and got rejected. And then look at your weekly candles. We can't get a single bullish week, or we can't stop making new lows every week. I only need probably 2 more weeks to throw in the towel and just say it's not that, again, it's still price versus time, but that time situation will drag. And it's not like you're going to get any meaningful moves. And let's go over to a couple crypto here quickly. One that has broken down. Not a surprise, only because it held its head for so long. But look, KNC was trying to break out, was acting real strong, has done quite well in this environment, and then finally capitulated. Um, we've been looking at the 886 for a while. It looks like this. There's KNC. This is an alternate bat. It's really close, but your 113 is about 480. Got to almost 6, but yeah, there's a bat there. And we have talked about why so many of these, once they flirted with new all-time highs and could not continue, are going to correct. They're not going to do your massive surge, not going to break out anytime soon. And KNC was the strongest of all of those. Here's MicroStrategy. Where's Michael Saylor going to be in about a year? What do you think, folks? Crypto Cartel says on Total Crypto, yes, we were looking for 171. And I agree with your statement. On April 26th, I said wait for 1715. Then 2 days later, it did hit, but it didn't take out the 2-month previous low. True. I agree with that. But the problem with it, you need to see reaction. You need to stop the bleeding. It has to give you a couple of days, a few bullish candles, and it's not doing it. There's zero response. This is where the response matters. Are we going into a dud phase where it hits the numbers and then skids sideways for 30 days only to roll over? That would be my thought. And 30 days puts you basically at the end of the month. Yeah, look, that's a nice one too. Jordan says Saylor said he'd buy the BTC for $25 from Buffett and Munger. Buffett and Munger, a bunch of old 20th century grifters that need to go away, but they won't because they've just benefited from a massive liquidity cycle. That's it. Keep their political putties in the pocket, and that's it. I don't think Warren Buffett is the greatest investor of all time. I think he's the greatest investing grifter of all time. And Charlie Munger's his bitch. Yeah, I said that. Tired of these old people just barking nonsense, right? They'll be gone in a few years, and then what? And then what? Look, MicroStrategy, folks, all-time full reset. That's another problem. Full-time reset at 204. And that's what you just look, apply the framework. Forget all these guys. Do your work. We know what we have with the harmonics. All right, we're not. It's not like I'm trying to fudge some kind of pattern or some narrative into here. We're respecting the downtrend. We know this is not reacting. And so where does it go? How does the cycle end? It fully resets like that. MicroStrategy 246, folks. Trading 352. Yeah, where are those guys going to be? Where's Munger going to be? Changing his diaper when this market hits? I think so. I think we're all a little bit tired of those. Here's a guy, Charlie Munger, who will praise the Chinese government, okay, because they banned Bitcoin. He's a joke. He's a CCP plant. Real easy to make $1 billion when you're given 10, 20, 50 billion to play with. Trust me. It's out of hand, folks. And I had a little message with Mitch Ray. Mitch Ray looks like he's coming back from his trip. I'm coming back from my trip. The two of us are going to get on a nice drinking stream in a week or so. And then I'll let you know what I really think. Looking forward to that. But hey, MicroStrategy, sorry, Michael Saylor, we got issues, major issues. Meanwhile, some of the other stuff that the other crypto that let's look at Ethereum, please. 2800, and here we go. 2800 on Ethereum. Is there anything there other than this long-term uptrend? Nope. No. What's the long-term uptrend on Ethereum? Let's bring it all into play here. Ethereum looks like that. Is that a failed uptrend? Potentially. I think it's. I said this about Ethereum and Bitcoin. It's truly about your prior month ranges. 2 or 3 months ago, I thought, okay, it doesn't have to do much to hold. It just can't fail prior monthly lows. So now we're back down here at this prior monthly low at 26, 2700. Apparently, the gas fees are absolutely outrageous. They've never been more, never been higher. I again, I don't. It's not something I follow. Although that would be a great chart to look at gas fees. But I just think our focus on action, price action, individual price action, gives us the ranges and early signs we need to see of what can potentially happen here. And we are 1, 2, 3 bars away. This range, these lower levels, can't be violated. I do not want to see a single monthly range violated on Ethereum, which basically puts the floor at 2,700. Beyond that, much time, much more time, and on our daily, recall the back-to-back patterns. Your Gartley type 1 continuation, retesting a rather ugly prior Gartley that with that target 2, there it is. If you fail 27, 30, 2,700, we've got trouble, folks. It's even if we go grinding sideways, let's say we go back down to 25 or 22, the lower you go, the more time it takes. That's how we should be thinking about it. Yeah, I think so. Jerkshire Hathaway, for real. These guys have got, I tell you, they got real kahunas to say the stuff that they said. What I saw that article, I posted it to say what that guy said about crypto and then compliment the Chinese premier because he banned the most secure digital asset ever created in Bitcoin, and that's what it is. Sure, you could say Bitcoin's a Ponzi scheme, but so is the whole market. So has been this whole bull run in the last 2 years. It's a Ponzi scheme. Easy liquidity to the big banks like Goldman and BlackRock and all those other ones that skim a half a percentage point off of hundreds of billions of dollars. Really easy to make money that way, guys. It's a joke. And as individual investors, we need to realize that this game that these clowns have been playing, okay, is it ebbs and flows. They have just benefited from the greatest monetary scam of the last few years as the Fed has expanded his balance sheet, doubled it in 2 years, and then just kind of wash that money through the other bigger investment funds. None of us will ever see that money, and the real numbers are pretty absurd, quite frankly. But here's Bitcoin. Let's just focus on this. Yes, we have a little bat pattern depending on your data feed, folks. We have a little pattern on the daily on a couple of them, but we need to see. I absolutely need to see this thing put in the floor. 37,000 for me has been the new point. This was my other the other statement from in prior weeks, that we have really nailed the absolute trailing supports, if you will. First, we said 33, got to hold. Then we said about 35, 34, 36, somewhere like there. And then now I'm saying 37, and we could grind and grind. Maybe we get a little relief rally back up to 41.5 off of that pattern and then back down as this just stair steps sideways to down. Not a lot I want to hang my hat on. I just think it's, we have to be aware of the relative position of all of these markets. And I got into that yesterday and Thursday. The possibilities of other levels that could be tested, I don't want to address them yet. I think something's coming. I think something's coming with the larger markets, where if you go to, say, again, the diamonds, all right, the diamonds, I think that and the SPY are the two markets to pay attention to, because any reactive rally here, what will happen quite soon is, hope we get a reaction off of these lows. But then I'm going to look for the realization of that target, and then the type 2 return ends up being a total dump. Sure, we could get, like I said, reaction off of this current 886, but the SPY that broke the lows yesterday, you tried to take out March lows, you did, now you're bouncing. It's just a relief rally. That's just the Fed going in there, literally buying S&P 500 contracts to support the market. My concern on something like this, we get like, where I thought we had a hourly pattern here. Where'd it go? No, we didn't. We don't even have a pattern. I thought we had a pattern here on the 4-hour. Nothing. Maybe it was the Qs. The Qs are Russell. Here's Russell. Yeah, there's the Russell index on the 4-hour chart. And this is, we don't look at this too much, but the Russell 2000 ETF. There's butterfly on the 4-hour. Can we get a relief rally? Terminal bar started, a few days ago? And we're in that 3-5 bar consolidation window that's decides to go to the hop. This is the thing to look for on Russell. I know it's on a couple others, but it exemplifies what to expect. If we can get a little bounce up to 195 and your type 1 reaction, this is where the bullish pattern in a bearish trend can tell us a great deal, because once that reaction's over, and maybe it happens over the next 2 or 3 weeks, the return is what fails. That's what we saw in nat gas on the upside, where we had the reaction and then the resumption of the primary trend, with something like the Russell reaction, and then this target one would be a devastating sell point for the continuation, something like that on the daily. And then look at the Russell on the daily. The Russell peaked before all other indices, and just in ideal technical fashion. Look at your monthly, folks, on the Russell. Let's just get a little perspective on how far and how much fluff this COVID rally really is. Maybe call it, what were we calling it yesterday? The COVID bubble. COVID bubble. This is, I think it's really a fair assessment. That's your long-term uptrend on IWM. And we come back down, hit an 886 of that move. Come up, Bang, reset to 886. 112, 112, 113. That's your COVID low. 886 full reset. So these are the ratios that we're laying out well in advance. Don't be surprised when we get there. Here's the other kind of connect the dot scenario. It's not really, it's not truly a 5-0 pattern, but you do have the ratios. We could connect dots like this. If we say that kind of sets up your, it's not a shark to the top, but you do have the necessary components for possible 5-0, where that comes back, and then up at that D point, you come and retrace. Minimum 50 puts you at 173. You're 618. And these are minimum levels, folks. I can't stress that enough, that when we get this close in this fashion, we're going to hit Russell 618, 156. These are all saying markets have to go 15 to 20% lower before they can even hit harmonic lows. What do I mean by a type 2 return? Well, really quick, the type 2 return is this. All right, on nat gas is the best example. We have really been on top of this from the beginning. Also the boil. This is the harmonic pattern framework. And where do you learn about this? You go back to Harmonic Trader. I'll show you where exactly in a second. But again, for those that are new, and I welcome everybody that's new, if some of the terminology is over your head or I'm going a little fast for you, please get the software. That's your first job. Get Harmonic Pattern Collection for TradingView. Get the free trial. Why? You need the levels. 2, you understand that every harmonic pattern is a reaction first. That's type 1. And then the type 2 return. That's where we end the reaction, usually with an HSI variable, and then you go back to retest the zone. So that return move is returning for the type 2 move, the type 2 setup. The larger possibility for harmonic patterns comes on that secondary test, where we'll look up in here in this area for something, maybe as high as 916 at the hop, for the larger possibility. In doing so, or in getting to that point, what happens at that level can tell us a great deal of whether or not that truly will materialize. Because your blowouts, your failures, frequently happen on the return, where it just, as you're waiting for confirmation or as you're riding it back up to the zone, it just blows right through. Can't emphasize this enough. Burn this framework into your head. If you're new to this, simply take the time. Go to Harmonic Trader, folks. Go over to become a basic member. This is where it all starts, and it's all free. Get your trials, and I emphasize this to everyone. Before you subscribe to anything, please exhaust the trials. Actually learn something for free before even paying. It makes my life a lot easier, so we can have the discussions we need with the harmonic pattern terminology. I created the harmonic patterns. Yes, there's other people doing harmonic pattern work. Some are great, like my good buddy Mitch Ray. Go check him out. He does a nightly show. He does probably the best technical work on the web. But there's a lot of other jokers out there that have no clue about what's going on. And that's why you have to start here. We talk about harmonic patterns exclusively in our discussions, because all of my decisions fall within the harmonic pattern framework and the tools that I provide. So, and then get the books. And here's the thing. Let's look at volume 3 today, because this shows us the framework. Simply click on that link, get your volume 3, access it. So here's type 1, type 2. This is what you want to look for. Where'd you go? Come on back. It's like this. I had it. We start with terminal bar. Okay, that's terminal bar. That's our first reversal point. And then let me find the illustration for the 1-2. Where'd it go? Here we go. So this is kind of how we look at every harmonic pattern. We look for the first reaction, and then it comes back for the secondary retest. All you need to do is spend time with the automated harmonic patterns to see this phenomenon repeat over and over again. All right, this stuff is relatively new to technical analysis since I introduced it 20 years ago in those books. But now we're hammering it home 3 days a week, Monday, Tuesday, Thursday, around 11:30 or so. We'll do more of this. My goal here is to show you the real-time examples of how this stuff unfolds, and then just repetition. Repetition is the mother of skill. We burn that into our brain over and over again so that we establish the proper expectations. Again, go back 2 weeks. Go back to the second, third week of April. What we were saying about nat gas and oil, that we were in reaction phase to come all the way down and then look set up for the return. Couple of more. So big shout out. And again, for those that are my moderators, I really appreciate what you folks do. And we will be having a little moderator meeting on Thursday, folks. And Stephanie's going to reach out to the mods, and we're going to be starting to really crank it up. I want to get you guys a bit more involved. I also want to reach out to you personally, so I look forward to our meeting on Thursday. That's just for moderators. Thanks, Snipes. Exactly. Thank you, David V. Stupid Head. What's up? Stupid Head says, what are determining type 1 and type 2 returns? Thanks a lot for the information. What I can say is get the software. You will see it. What determines it is the software. The software is going to automatically generate the levels and your arrows that tell you when. Now, an automation of that will be happening soon. Just simple identification, automated type 1, type 2 is coming soon, but it's not difficult once you understand what to look for. Then follow along with me every time. Stephanie, let's update that Discord link if we can. Can you put the new Discord link in the chat for the folks? Someone is saying that the Discord link on Basic Members page has expired. I will fix that. We'll get to that. Let me fix it on that page. Stephanie will put the current Discord link into the chat. Thank you, Stephanie. Please check the chat. Is it based off fibs? Look, it's based off what we call harmonic ratios. Now maybe we can save that for Thursday, because harmonic ratios are not all Fibonacci numbers. Also, we know Fibonacci, the mathematician, was merely a translator for some Hindu and Muslim scholars that preceded him by hundreds of years. So his ratios are actually really a couple of interesting guys that I'm not going to get into today, but we're looking at geometric ratios. We're looking at the ratios that express themselves in nature through phyllotaxis patterns, which are natural growth cycles. That's a whole nother discussion that we could have. We should have. We had that discussion last month in our last stream with Mitch Ray. Like, what do the harmonic ratios really mean? It's not just Fibonacci. It's a harmonic ratio spread from 382 all the way to 3618. But when we apply them to the markets, I'll ask you, folks, are there better ratios than the harmonic ratios? Is there a better framework? Show me a better framework, and I'll be the first one to support it. But I look at the harmonic pattern ratios, the harmonic pattern framework, to mimic phyllotaxis in nature. I call it market phyllotaxis, and I actually talk about that in the Volume 3 book. So if you want a deep dive, get the Volume 3, folks, and read it. Read it. Market phyllotaxis is a concept that, you know, absolutely. These are new ideas that I've been putting forth for the last 25 years. And what to expect from harmonic patterns is probably one of the main reasons why I wrote this volume 3. And just go to the first 10, 20 pages. If you really want a deeper dive on what this harmonic thing is all about, please read all of that. That's some of I feel like some of my better work to truly get to why this harmonic thing works so well. Take a look. First 10, 20 pages, and I think you only need to read a few before it grabs you, and then you see really what's going on here. Appreciate it. Thank you, Neon. Okay, one or two more, folks, because I'm going to get out of here and get ready. We'll be back on Thursday. 11:30 is becoming the sharper time. Let's just look at NQ for today. Up fractionally 8 or so. Here's the only thing I want to look for on NASDAQ. A flush. We're going to flush under these lows. Our 12.8 level, this has been the big number on the futures. Why? Because we've been all along looking for this kind of 1618 correction off the October move. Something like to there. That's mini futures. Basically 12,880 is the exact number. And we're threatening that. I don't feel as if that would actually even give us much. I'm looking at the larger monthly retracements for NASDAQ futures in the same way I am the Dow and S&P, that, in my opinion, if we look at the COVID pop, the COVID bubble, or better yet, cold-vid, because that was just a bad flu, in my opinion. This 886, folks, you need to know it. Okay, in the same way that I was talking about natural gas at 240 to go to 7, 8, 9, 15. It's an outrageous claim. Our full reset 886 on the futures is 7,800. That's the COVID full reset. So it's just going to take one more big candle down. We had a terrible candle last month, and as I've been saying, the last 2 weeks of April, the last 2 Fridays have been devastating. I expect this Friday to be the same. Yep. We've got a lot to consider. Victoria says printing out the material on Scott's website to flip through at night has always helped a ton. Appreciate that, Victoria, especially like the difference between butterfly and crab. And yeah, that's a great comment. Listen, let me back off my high horse here for a second and my screeching to understand, to show everybody, look, there's a lot of basics that you need to put together that takes 30 days. I love that 30 number. Hey, if you're going to start this process and you're going to jump in with harmonic patterns, if you don't give yourself at least 30 days to digest the material, don't even start. Because there is a harmonic learning curve. I talk about it in the book, in the volume 3 book, of what to expect. How do you learn? What are the things to look for? Because this is completely new for many people. I mean, a lot of people, most people outside of your 9th grade biology class have never heard of phyllotaxis. I mean, what the heck is phyllotaxis? Check it out. It's really cool. It does happen. There are amazing geometric proportions that are exemplified in countless natural processes that work in the market. But there's still that learning curve of digesting those ratios, digesting those measurements, and then even something like understanding how it plays out in the market. And the phases of the market, that I have brought up before, but I think always great to kind of review that it helps to manage expectations through the process. And the first step is identification. And so, and Gloria, Victoria, that's a great thing to do. Either buy the book, or I'll be giving out some books pretty soon. We're going to be doing a special session. So if you want a volume three, hold on. We're going to send out a bunch maybe in a week or so. But this book, this volume three book, I feel compiles the essentials of one and two with a whole bunch of new material to bring it all together so that you understand the process, that the identification stage versus the execution phase are going to be different sets of expectations and time limitations. And then the final phase of trade management is the essential piece that most people overlook, that includes targets and strategies of how to maximize these moves. Because most of the time, we're just capturing reactions. And let's go back to crypto for a second and let's look at that ape coin. Because ape coin, we talked about this yesterday, did it exactly. I mean, we couldn't have asked for a better set of parameters with ApeCoin, where we talked about the breakout. But the only way you're going to capture that massive move is with an aggressive management strategy that takes it out at your targets. If you sit on your hands, stuff like this can happen quite easily, where you hit your numbers and then bang, you're rejected. And that's a 50% drop off the peak. That all of that can be very devastating when it happens in a rather short period of time. This is maybe one of the tricky things about harmonics to be aware of, that these reactions, it can go up, hit your numbers, and then just get smacked right back down. And I'll show you one other one that we talked about last week, which was Dogecoin. I highlighted that yesterday. Again, in Doge, just going to take a lot of time. But Doge was, again, this massive move up to the 886. And I remember what I said yesterday: I'll curse you out, blah, 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 if you don't sell at the 886. And then it got rejected right back down. People, get used to this. Even if we're in a time versus price market where we're going to go sideways, on the upside, on the bullish moves, nothing but reactions like this, not sustainable until I see something else, until I see a big fat pattern, bullish Gartley, bullish bat pattern materialize here. I just think this is a drag. And I'm getting concerned on Doge because your hop is at 08. And my friend VJ called it. You called it, man. VJ, we talked about this a couple weeks ago, not even 2 weeks ago, how we could maybe come up to 18 or 19, rejected back down. Target 1 at 21 was realized all the way back here, but this type 2 slop going sideways, and then especially last week's pop and roll, I'm not too concerned about it in terms of it, falling apart, but I just think it's going to be, you're not going to get the big move that everyone hopes and prays for on Doge. This is probably just kind of a place where people are going to try to hide out until the next crypto cycle. And in that time, you grind for a while. Appreciate that. Yeah. Hey, Scotty, what's up? Scotty's saying, it's a good comment. It helps to remember the patterns and the levels and think of each as a story. I think so, or at least describe the framework. Are we in the reaction phase? Are we in the return phase? What it takes, what are the signals for the reversal phase? Confirmation, 3-bar price action. There are specific strategies at each point. That's what I try to cover in these sessions real time, and on the website, plenty of information that outlines all of that. So that's what I have for today, folks. I'm going to wrap it up. I'm coming. I'm really coming. I feel like, the ship is turning here for myself to bring the necessary energy that I want to see every day for myself to be into it, into the markets. The markets can be quite frustrating. It's a marathon, not a sprint. We have to remember that. But until we see larger developments, yeah, we are going to have to pace ourselves this summer. Again, I am. This is going to be a long summer that has not even started. It's May 3rd, not until June 21st. Eesh. And we know how crypto loves those solstice moves. Spring solstice, fall solstice. What does it do from the 21st of March to the 21st of June? Sideways. I think we're sideways until then on crypto. And then, ugly consolidation where you're hoping or looking for some kind of major reversal. Not going to happen, folks. So we'll be back on Thursday. We'll get into more of that. 11:30 sharp. I will be there. Until then, again, thank you, folks. We'll see you. Go get them.